All right, so now we wait. We will all be verifying the stats on external sources to see. Obviously, we'll see what the stock does. It's right there, but we should be getting numbers probably in a couple minutes, maybe even in a couple seconds. And once we get the numbers, we'll see how the stock reacts going from there. Most of you guys voted for 30% growth on the guide. About 37% of the chat voted for 30% guide for 2025, which I think is reasonable. I think Palantir really wants to hit 30%. I think psychologically being at 30 versus 27, 28 is important. So we will see that guide pretty soon. All right,
Let's
now we wait.
Baited like last time by some fake news.
Yeah. I know you guys in the chat are going to try to say $1 billion in revenue. I got baited by it last time, and it was stupid on my part. But
oh yeah, where is Arnie?
I don't know. Arnie's probably vacationing somewhere right now.
He's skiing somewhere.
He's enjoying life.
Arnie said he might drop by.
Yeah, he might be able to make it. All right, now we wait.
Arnie is so confident in Palantir, he doesn't even show up to earnings. He's like,
well, I mean, when you invest in $7, if the stock really goes to 60 or 50, I mean, and I asked my chat the other day, a lot of people just said, look, we just buy the dip. I mean, most people are educated enough to know the valuation's extended. If it does take a massive hit, you get an opportunity to buy more shares. If not, you get to relax and see the stock go up. So it's actually, no one should be that nervous, to be honest. If you've been in this for a while, you sit back and you buy more if you like the dip. If not, then you just continue to hold. So I don't think it has to be that scary. It's a lot less scary than May of 2023 when the stock was $7 and we were looking for that catalyst. You know, I think a lot
and the growth rate was going down and not up. We
Correct.
went down to 14%.
Correct.
What kind of upside are you expecting? I mean, if it's a blowout, I mean, we all like expect like 30-ish, but imagine it's like 35, 40, like out of nowhere. Like, what kind of reaction do you expect?
I think we could see 90. I think it can get there. We are seeing a little bit.
We might hit 90 before the call. I mean, look at this thing.
Something happened.
Well, earnings has been very pump fakey. I mean, some stocks have gone up and then down, so I don't think we can trust the initial moves. But once we get the numbers, we'll then see what happens. We are up about 1.2%, folks. Don't have the numbers yet. I am looking to see. They should be out in 2 minutes. 4:05, I think they should be out. Oh, we got it. Wait, no, we didn't. I almost fell for that. Shout out to RC posting the fake numbers. Almost fell for that. The street wants 11 cents of EPS and 775 million of revenue. 11 cents of EPS and 775 million.
11 cents adjusted, right?
Correct, adjusted, yeah.
How much would be the 700 million? Like what the street wants?
It would be about 26 to 27% growth if we do 775.
Oh, wow.
And if we do 799, it would be about 30 to 31% growth.
Yeah, that's right. Yeah.
This is the fun part about investing, right? This is the anxiety part.
I'll say the thing that I like most about Palantir is that they do their earnings on YouTube, and that makes it so easy rather than like having to type into Q4 or something like that and you know, stream it through that. And then obviously you get the video response as well, looking at the actual folks, right? So instead of like having just a normal conference call like it's the 90s, yeah, it's nice.
Yeah, they're one of the first to do that. But do you guys, okay, the question that always comes up in earnings.
We're green. We're green.
Oh, wow.
90. Oh, my goodness. We are green. 90.3, up 8%. Again, we got to wait. We got to wait until we see this play out. But we have hit $90 for the first time ever. It could go away very quickly as well. But we are green, up 8%. I am looking for the numbers. I am looking for them. If anyone has them on the panel, let me know. But we are indeed green. It's holding the green so far. I know it's only been like 30 seconds, but it is holding. Initial reaction is positive. Initial reaction is positive. I don't have the numbers yet. I'm checking multiple sources to see if I can get them. Don't have them yet, but we are green. 14 cents. Wow. 14 cents versus expectations of 11 cents. 36% growth.
Wow. Where's the release?
52% revenue growth of the United States, 31% guide. We got a 30% guide. We got a 30 freaking percent guide going into 2025. They came in with $828 million of revenue, beating expectations of 781 million. Folks, Palantir just put up some numbers to prove they are the real deal.
That is crazy. Wow.
Oh,
That is
Has anyone seen where it's listed? I can't find it anywhere.
no, I can't find it either. It's probably going to be posted in a second, but we do have sources that I trust that posted it. So those are accurate. We're waiting on the actual numbers. Oh, there we go. I got it. This is the tweet. I don't have the exact website yet on Palantir, but this is the tweet. Let me pull it up right here. Okay, here we go. Palantir reports Q4 2024 revenue growth of 36%. That's close to 40. U.S. revenue growth of 52% year over year. Issues fiscal year 2025 revenue guidance of 31% year over year growth. They are going to compound for their first year since 2021 at above 30%. U.S. commercial revenue grew 64% year over year and 20% quarter over quarter. U.S. government revenue grew 45% year over year and 7% quarter over quarter. That commercial revenue number in line with what they guided for and around that 60 to 70% range they've been hitting it for the past couple quarters. Adjusted operating margins are 45%. That number was 39%, if I'm not wrong, last quarter. So
their rule of 40 is 81%.
Rule of 40 just went to 81. That was at 68% last quarter. Adjusted operating margins went from 39 to 45. That's a 6% increase quarter over quarter. They generated $1.2 billion in free cash flow, with $517 million of that being at a 63% margin, which is incredible. Our GAAP EPS of 3 cents in Q4 2024 was in line with analyst estimates, and our adjusted EPS of 14 cents outperformed estimates by 27%. That's even with all the SARS stuff we've been talking about. For fiscal year 2025, we expect revenue of 3.7 to 3.75 billion. 206 to 254 million above current analyst estimates of 3.5 to 3.53 billion. I mean,
To be honest, I'm kind of speechless. Like, not even in my wildest dreams could I see that. Like, that's why I said the question. Like, what if they blow out? And you said 90, and well, we got 94 now. I
remember giving Amir crap because he was saying they think that they would come in at 30%, and that 30% would have been 10% quarter over quarter. That's 14% quarter over quarter.
It's Palantir, baby. Never know. We never know.
I'm still speechless.
Well, here's the thing. Here's the thing. A lot of people will say, even with this type of growth, it doesn't justify the valuation. The problem with that argument, you're going to hear a lot of these headlines tomorrow that even with this growth, it's not enough to live up to the 12% further multiple expansion we got just now. However, there's not many other software companies able to compound and reaccelerate, and the street is caring about the future, not the past. And that's what we're seeing right now with Palantir. That is why we are getting this premium.
I want to release. Come on, Palantir.
Well, I guess the new buy zone, the safe buy zone, is $80.
I mean, there you go.
$80.
There is simply no company like Palantir. Sarah, thank you for the gifted 20. Appreciate that. Dragos, thank you as well for the 50 gifted. For every Palantir shareholder, congratulations. Regardless of what happens to the stock after hours or tomorrow, this is a company that just put up numbers that is proving they are not effing around. Now, if you give me guys about 7 minutes, I'm going to get through Karp's letter that just came out. I'm going to read this word for word, and then we will get back into all the numbers.
Guys, imagine a year ago where Palantir was trading. If I told you in 1 year from now, Palantir is going to trade at 100, which is like a possibility, like it might hit that after hours. Like, you would have called me crazy, stupid, every other name. If I told you, like, yeah, Palantir is going to trade at 100 in a year's time. It's wild.
Well, there we go. We are up 12% after hours right now, and Palantir, quite frankly, put up numbers that, regardless of what happens to the stock, I mean, I don't think any of us really, like, the stock is cool, but these numbers are just unbelievable. And I think we kind of know now why Karp's been talking with all this bravado, because he's got the numbers to back it up. So let's get into this letter. From Alex Karp, CEO of Palantir. We are still in the earliest stages, but the beginning of the first act of a revolution that will play out over years and decades. Our total revenue in the fourth quarter last year reached a record $828 million, representing a growth rate of 14% from the prior quarter's total of $726 million and 36% from the same period the year before. This is not an incremental advance or marginal acceleration of our business. This is a new phase. And the momentum we are seeing across sectors, both commercial and government, is unlike anything that has come before. The business we have built has now developed its own internal momentum and strength, its own interior life and forms of untamed organic growth, with the output that we are seeing far surpassing what we are investing. A software juggernaut has indeed emerged. We have the products and reach of an established incumbent and the speed and growth and agility of an insurgent startup. It is the most lethal of combinations that we have been seeking to build, and the future is now coming into sharp focus. The strength of our commercial business in the United States, in particular, continues to astound even our most ardent believers, aka all of us on this panel right here. Our US revenue grew 52% year over year to $558 million in the last 3 months of 2024. And our US business at $1.9 billion for the year now accounts for 66% of our total sales. 3 years ago, government was 60%, commercial was 40%. That has flipped over the past 3 years. In the United States, commercial revenue alone in the fourth quarter grew 64% year over year and 20% quarter over quarter to $214 million. Sales to our U.S. government partners, from intelligence services to healthcare work, grew 45% year over year to $343 million in the fourth quarter, pushing annual sales to $1.2 billion in their U.S. government business. We have been preparing for this moment diligently for more than 20 years. A certain indifference to the doubts and opinions of others, to the shiny and fashionable thing, was absolutely required. But our patience and what some would fairly describe as our disregard for the received wisdom has been rewarded. Our results, the admittedly vulgar metric by which a market, often unsure of what it wants to reward, attempts to assess value in this world, have now surpassed even our most ambitious expectations. We still remember the quizzical looks of potential early investors when we attempted to explain that we were building enterprise software at a time when the floodgates of Silicon Valley had opened to fund consumer trinkets, online shopping websites, and other quite forgettable experiments in sating the needs of the latest capitalist mind. The looks were only more puzzled, the brows only more furrowed, when we made clear that we were intent on building software systems for U.S. defense and intelligence agencies. There were some challenging years. We were an odd bird flying in the wrong direction at the height of the consumer internet bubble. The embrace came only slowly at first, and then more recently, quite quickly. The unfortunate thing, either in business or politics, is that many of one's adversaries and antagonists will never respond to anything but strength, that crude form of power that does not ask for, but which requires compliance and deference. And so strength we have built. And still, the enemy of progress when attempting to advance the interests of either an institution or a nation is descent into complacency and abandonment of all humility. That sense of arrival, a certainty that history has ended, or condensation to an adversary or competitor betested, often only temporarily can be fatal. And it is the technical complacency of a society that often mirrors its political choices and instincts. Our commitment to tolerance and openness, our values as a culture, is without question infectious and compelling, but we cannot yet hope that they alone will protect us and win the day. A fuller statement of this argument and its implications for the current moment and the crossroads at which we have arrived is presently in The Technological Republic, which will be released shortly. This is Alex Karp's new book. As Samuel Huntington has written, the rise of the West was not made possible but by the superiority of its ideas or values or religion, but rather by its superiority in applying organized violence. He continued, Westerners often forget this. Non-Westerners never do. Sincerely, CEO of Palantir, Alexander Karp. Well, stocks at 96. Vince, give me your raw reactions. What are you feeling?
So wrong about this company. Like, it's so. Am I unmuted?
Yeah, you're good. You're good.
So completely speechless. I've been so wrong about this company. Like, imagine that you like, we were the crazy bulls, right? Like, people were like, this is a meme stock, and these guys are like fanatic, religious Palantir, and we were off by like a huge margin on how well the company was going to do. I've never seen this. This is super special, and I'm very speechless on how well they are doing.
Amir, your raw thoughts?
I've never been so frustrated that we don't have the actual numbers themselves. Like I want the release, I want the presentation, I want to crunch these numbers. I want to see what they actually did in detail. I've never felt this frustrated or impatient to get numbers. It's crazy. I don't even know what to say at this point. Like,
Speechless. This is
I
incredible.
feel like with numbers like that, you have to have some growth from Europe. Like you have to reverse that trend, because I just don't understand. Or the NDR has to be insane. Something. I'm with the mirror. Something's got to be way different.
come on, Palantir.
Let me get Dom's thoughts. Dom, your raw thoughts to this print. Dom, you're muted. Oh, you're still muted. Okay, you're muted.
There we go. I know my computer was freezing. How did they get the EPS beat with the SARS? Like, I just don't get it mathematically. How did they?
It's the operating margins. That's the only way you beat it, is if you have better margins.
There is another way, because sometimes in the bookkeeping, if you have a one-time cost, it can be like how do you call it? Like it can be amortized over a period of time, and that can, like as Amit was saying, that they were expecting this in 2029, happened in 2024. If it's a one-time cost, it might be that they spread it out over a few years, but again, we don't know until we get the numbers.
I mean, it is expensed as SBC. We don't know how much of the SARS there are, but the easy answer is that they just had a higher revenue base. So even at the same margin as last quarter, but we believe that they had increased margins. We don't know yet. We don't have the numbers, but likely just a higher revenue base than we could have ever predicted. Like I could never see above 800 million, and I was at I was at 2 cents. They came in at 3, which is in line with expectation, and I was at 780. So
I have the numbers. Amir, I just sent it in the chat if you want to start looking at it. I'm about to start going through all these numbers. One thing I want to say before we get into this, first of all, thank you 10,000 people for being part of this stream, 12,000 overall across our channels. First of all, congrats, everyone. You deserve it. I know a lot of you people that were watching all of us, reading our articles, watching our videos when the stock was $7, $8, $9. This is what happens when you believe in a vision and you have a revolutionary CEO like Alex Karp with a technology company that actually cares about their clients, not just cares about monetizing. We're seeing that happen in real time, and the growth is living up to the expectations, and the street is heavily rewarding something that is very hard to do. So congratulations to everyone. Congratulations for holding, and congrats for being part of the community.
Presentation's out.
All right, so let me pull up the numbers, and then we'll get into the actual presentation here right now. So U.S. revenue growth, 52% year over year, 12% quarter over quarter to $558 million. Commercial revenue, 64% to $214 million. U.S. government revenue, 45% and 7% quarter over quarter to $343 million. Revenue grew 36% year over year and 14% quarter over quarter to $828 million. Wow, 129 deals of at least 1 million, 58 of 5 million, 32 deals of at least 10 million. Closed a record-setting $803 million of U.S. commercial total contract value, up 134% year over year and 170% quarter over quarter. Are you kidding me? You're not kidding me, because I'm reading it right now. U.S. commercial remaining deal value is at $1.79 billion. That's up 99% year over year, 47% quarter over quarter. Customer count growth has finally reaccelerated quarter over quarter. Thank goodness. We got 43% year over year, 13% quarter over quarter. That number was 7% quarter over quarter. Now it is at 13%, so almost doubling, which is incredible. Cash from operations, $460 million, 56% margin. Adjusted free cash flow, $517 million, 63% margin. GAAP net income of $79 million. They took a $165 million. It's about 120. So 165 if you exclude SARS. So what's 165 minus 79? They took a $86 million hit on SARS, 86 million. Which isn't that bad. So we thought it would be 120. It ended up being 86. So that also helps them not have the EPS miss. GAAP income from operations of 11 million. That was a 1% margin, and then 142 million of income from operations when excluding the one-time SAR-related expense, which is a 17% margin. Rule of 40 score of 81%. Adjusted incomes of 373 million. That's a 45% margin. They now have 5.2 billion on the balance sheet with no debt, which is another reason that this stock continues to get a premium from the street, as their balance sheet is very heavily loaded in case they need to utilize it. U.S. revenue for the fiscal year 2024 grew 38% year over year to 1.9 billion. Revenue 29%, just a smidge under 30%, but they still got to that 29%, 2.87 billion. Cash from operations 1.15 billion, 40% margin. Adjusted free cash flow above 1 billion, 1.25. That's a 44% margin. GAAP net income of 462 million. That's the most amount of profit Palantir has ever made in the history of being a company, representing a 16% margin. For Q1 2025, they expect 862 million in revenue, adjusted income of operations of 354 to 358 million. For fiscal year 2025, they expect 3.7 to 3.75 billion. U.S. commercial revenue in excess of 1.07 billion. That's a 54% growth rate. Adjusted income from operations of 1.5 to 1.67 billion. Adjusted free cash flow of 1.5 to 1.7. I think they're sandbagging. I think that's going to be 2 billion of free cash flow by the end of 2025. And they expect to be profitable every single quarter for 2025 as well. All right, there you go. Look who came to join us on a very special occasion. Hold on, who is this guy who's been talking about this thing for the past 5 years? What's up, man?
Yo, this is a pretty amazing quarter, man.
What is it? Give me your raw feelings. What are your thoughts?
My raw feeling is there's no way we don't get to like 40-50% growth this year. Like it's going to be freaking huge. And all signs I'm seeing are pointing to that. You know, it's not just this quarter, it's what I'm seeing picking up in the market, talking to customers, talking to potential customers. Like this thing's going to be a juggernaut, dude.
I mean, Code, I don't. Were you expecting this type of growth for Q? I mean,
No.
this is just
no. From what I was thinking, I was like, I thought they would probably miss on EPS even. Like I didn't think they would have that kind of an EPS, beat. That's incredible. This is a really well-run company, dude.
Said it best, right there.
Well-run
really, very much said it all there. That sums up earnings.
Yeah, it's incredible. So, like, my outlook for the future this year, I just, how are we not going to accelerate that growth and just go ballistic? Given that every company, and like, there's probably things they're going to announce later this week that may blow the roof off things. So like, I think that people just have no idea how much traction they're getting in the market, and it's when you see the success stories at these companies, you're just like, wow, like technology could actually drive GDP up. If we're able to like use this across every company, we're able to like rework the way every company works with Foundry and Palantir, US GDP is going to get better. I guess that's how transformational this is going to be. So like, and I wouldn't say that unless I believed it, and trust me, I believe it. Like seeing what we're able to accomplish with this stuff. There's a lot of hurdles along the way. Like how do we get more experts in Foundry? How do we get those people staffed inside companies? How do we like scale this thing on a level where it's like Foundry isn't software, Foundry is the software that runs the company? Like we've got a long way to go there, but I think that's where we're going to end up, based on what I'm seeing.
So first of all, everyone's socials are in the description. I did not know CodeStrap was going to be here. I just want to give him a quick shout out. If you are on X, please make sure to follow CodeStrap. He's got a lot of announcements coming this year that if you're interested in Palantir, you will care about. And he's been a Palantir OG, been in this community for the past 5 years. And it's pretty exciting to see it come full circle.
Lots of open source software coming. We got ComsForge releasing Q2. And we're hoping to help be a catalyst to drive that developer adoption and like get the developer community bootstrap with some really impressive stuff you just can't build on any other platform. Like our vision with ComsForge is like, we're going to give you an agentic framework built natively for Foundry that does things that you didn't even think were actually possible with today's software. So stay on the lookout for those things. Q2 will be when we drop our first one. We're just going to keep releasing open source ones throughout the year. But I do think this catalyst around the developer community is going to drive a ton of growth. I really do.
Yeah, and I think the fact that you've been building this developer community over the past couple of years and getting developers to evangelize Palantir, I mean, it is so special. And
dude, full credit to Sham and team. Like that was Sham's vision, getting this thing built. And he's had a lot of help. This guy Andy over at Palantir has been really instrumental in driving it. The team around it, Anurag and crew, like they're putting some really, really special stuff together for DevCon 2. So like it's all Sham and that team that are driving this. So full credit to them, man. Full credit.
Let's get the CNBC coverage, and then we'll keep going from there, guys. The call should be starting in about 35 minutes.
So that was 3 cents estimates, revenue of $828 million. That was a big beat as well. The U.S. continues to be the growth driver amid AI adoption. U.S. revenue up 52% year over year to $558 million. U.S. commercial revenue grew 64% year over year to $214 million. U.S. government up 45% to $343 million. Palantir closed 129 deals of at least $1 million, 58 deals of at least $5 million, 32 deals of at least $10 million. Here's an eye-popping stat for you as well. Rule of 40 score, 81%. For Q1, revenue of $858 to $862 million. That was much higher than estimates for full year 2025. Revenue of $3.74 to $3.757 billion. That's also stronger. U.S. commercial in excess of $1.08 billion. That's what's expected. That represents a 54% growth rate this year. I spoke with co-founder and CEO Alex Karp. Here's what he told me, quote, "We're very long on America commercial, very long on this being a revolution, very focused on the present and future. See ourselves validated that ontology is what makes LLMs and AI valuable. We're somewhat happy, they would say gleeful, that the experts are wrong yet again." All of this fueled by boot camps that they do, these AIP boot camps, also word of mouth. As Karp puts it, quote, "We do a lot of proclamations of truth, like the West is superior and we should undoubtedly kill terrorists. We do education, we don't do marketing." An example, Palantir implemented in minutes a process, according to Karp, for a company that had spent 5 years trying to do it themselves. I also asked Karp about tariffs and what changing policy for things like trade could mean for Palantir software. Karp saying, quote, "This is a revolutionary moment. We're embracing the revolution. There are going to be ups and downs. As long as it's good for the upward trajectory of America, we support it. And now I'm kind of glad that we're getting really serious on foreign policy. It's like, don't screw with America. We bring a lot of goodness to the world. Give us some respect." Karp on Doge and Elon Musk. Quote, "We help where we can. We want to help." Very supportive of what Elon is doing. I asked Karp about DeepSeek as well, saying, he said, quote, "Hopefully it wakes America up. Just because we're the first mover and we have the best tech scene and we're the inventors and we're the builders doesn't mean adversaries can't copy, and we have to just keep running." So if you take a look at shares of Palantir here, they are shooting higher, up 11%. On this beat on the top and bottom lines and strong guidance for 2025. So Adam, I'm going to go back to you. You can either answer the question I put in front of you, or if you want to react to Palantir here, given the fact that it really is on the forefront of AI and software application.
Yeah, you know, what's funny is I was in studio with you guys the last time Palantir reported earnings, and they were right around $50. Now we're doubling just in one quarter, nearing $100 a share. And I think, you know, DeepSeek really kind of emphasized that we're now in a new stage of AI.
And Karp obviously pressed this idea that the ontology is that new stage of AI. So I think the stock might about to be hitting 100. It's at 99.27. I know all of you guys are going through the numbers code. I just want to get your perspective on DeepSeek and its relationship to Palantir.
Sure.
Do you think that is the catalyst for what Karp's been speaking about when it comes to this ontology?
I mean, to me, it's the catalyst for what I've been saying and Sean have been saying for almost a year now, which is like the models are the commodity. You know, like there's going to be a lot of innovation in the side. Like I think open source is probably going to win. You know, when Sean came and spoke at the developer meetup we had, he showed a graph and it was like all these models basically converging on the same performance characteristics, right? And like he was telling the audience there, like, look, these things are all kind of converging here. What you really need is a platform that lets you leverage them in like a KLLM like pattern where like, you know, some of the patterns are certain models are better at certain tasks. So you use them for like one model for data extraction, another model might be better for safety layers, another model might do this thing better. You can do LLM based routing because like one of the biggest challenges I have and a lot of developers have right now with using these things is the scale. We get rate limited constantly. Like there just isn't enough infrastructure. If I want to run a use case across 75,000 people at an organization, we hit these rate limits really quickly. So you'll build fallbacks and we're like, well, if this model is not available, let's use this model. And if this one's not available, let's use this model. And Sean was explaining all these things like, look, that's what AIP is. It's this platform that's going to allow you to do all the hard work and engineering around these models to actually make them useful, right? Never mind the ontology and everything that's giving you, et cetera, et cetera. So like, I think that it's validation that the areas we need to be focused on right now to actually extract enterprise value isn't some GPT-5, let's spend 100 billion. It's like, no, let's spend 5 million and figure out how your enterprise can use this technology effectively to drive growth, right? To take cost out of the business and to drive revenue up. And ultimately what that mission is improving GDP, right? Like it's about how do we make American industry work better, you know? And so I think that that's the message there. And I'm hoping that the investors who are, and the people who are allocating capital right now, these like long-term infrastructure projects go, no, how about instead of worrying about better models, we worry about availability of these models, the cost of these models. We make these things economically viable. So like a person like me who's trying to drive adoption across 100,000 person enterprise to drive GDP can actually achieve that freaking mission rather than go spending another 100 billion on some useless freaking project named after a movie, you know? Like that's the message. That's what that's telling us right now.
I would agree. And it seems like the street is waking up to that. We have not hit $100 yet, folks. We got Dan Ives on CNBC. Let's get his take on what's going on with Palantir, one of the only institutional analysts that has actually been following the story since the beginning. Let's get his take, and then we'll keep going from there.
Guidance for full year 2025 free cash flow better than expected as well. It's a stock that has divided analysts, even as it soared nearly 400% in the past 12 months. Only 3 analysts have buy ratings. We have one of them with us here today, Dan Ives, Wedbush Global Head of Technology Research. He has an outperform and a street high $90 price target. On the other side of this debate, though, is Brent Thill. He's tech sector lead at Jefferies. He has an underperform on Palantir and a $28 price target. It's good to have.
Okay, so we got one analyst at 90, another analyst at 28. This is going to be very interesting to see how they converge and what arguments they go for in regards to this earnings.
Have you both here. And Brent, I'm actually going to start with you because in the shareholder letter that Alex Karp puts out every quarter, he basically called this a new phase as AI adoption accelerates and with it sales growth, which is what we're seeing at Palantir. And I spoke to Karp and he said it to me like this. He said, quote, say you're a PE company, you acquire a large insurance company and you wanted to change the cost of revenue, meaning how can you have fewer people doing the same amount of underwriting and have the same number of customers? That was a multi-year project, like 3 to 5. Now it's a 1-quarter cost that's completely different. And if you do it and the company down the street doesn't, you're going to have very different margins and very different revenue. And then he goes on from there. But we've talked about it for a while now that 2025 could be the year where you see this application layer actually take effect and you see corporate America begin to realize the benefits of the investments they've made on AI. Palantir seems to be very far ahead based on the earnings we just got. Does this change your thesis?
Look, they've had great fundamentals. I think this is a question of valuation. Again, you'd have to grow 5 years in a row at 50% and stock would still trade at 15 times revenue. So it's not that we're arguing the fundamentals. Kudos to them and great call by Dan on the stock. Our view is more about liking other names. And remember, 50% of this base is retail and insiders. There's no other software company like this. It's the lowest asked about question of any institutional investor because barely any institutional investors own it. And so I go back to, we've all seen what happened to Snowflake at 50 times revenue. We've all seen what happened to Datadog and others. And maybe Palantir is different. Kudos to them. And I agree with you. It's getting to the application layer and they're in a great spot. So I'm not sitting here attacking the fundamentals. The fundamentals are great. Ours is largely focused on the stock and looking at what's happened to investors in the last 20 years. When you chase things at 50 times revenue, it doesn't end well. And none of them have. So
okay.
I think part of it's we're just scarred from that. And maybe we're totally wrong on that. And so I acknowledge, we're wrong, but I also acknowledge like you got to look at the history and look at the fundamental analysis. So that's kind of what we're sticking to right now.
Dan, I want to get your response to that because valuation has been raised by a number of folks here. One of the other things that came up in my conversation with Karp is the fact that, this is how he put it, he said, we don't have the right jokes, the right suits, the right steak dinners. We're never exactly the right people at the right time, unfortunately, and that's probably the biggest limit to our growth. Wrong people, wrong time, but right products.
Yep.
Sort of getting at this idea that they tend to be contrarian and that they don't have a marketing team, and yet they're growing. You've called it the Messi of AI, but the Messi of AI does look expensive based on some valuation metrics. Is it right for a pullback here, or does it keep going?
Look, I think this was a historical quarter. And ultimately, look, the Bears, they were bearish at $10, hated 40, and despised it at 100, right? And I think they can see AI in the spreadsheets. When we do the checks that we've done for Palantir, I think it's the next Oracle, it's the next Salesforce. I think this is a company, when it comes to AI revolution, this is really front and center is what's going to be one of the huge beneficiaries there.
Do they need to pull the marketing lever here? Do they need to build out that team, or it's not necessary?
I think the scary thing is with no direct sales force and basically more inbound, this is what they've done in terms of what these types of numbers. You start to look out the next 3, 4, 5 years. I mean, I think this is ultimately, this could be a $1 trillion market cap when we look out for the next 2, 3, 4 years. As Brett's talked about, I mean, institutional has obviously been very negative on it. But as we've talked, I think many have missed the biggest historical growth themes the last 20 years because they focus on valuation.
I'm going to try to get to both of you quick, but we got to be quick on the answers. Brent, is Palantir Tesla or NVIDIA here? Tesla, where fundamentals don't matter because the personality of the CEO is just so big, or NVIDIA, where it might look expensive now, but next year it's going to look cheap because of the fundamentals?
It's Tesla right now.
Okay.
No. I mean, again, you can't go back to any historic company that's ever sustained it. So again, if they can accelerate growth and keep it, then we're wrong. But it would be the only company in software that I've covered for 25 years that would maintain that.
Okay. Tesla's not bad, though. Dan, is it Tesla or NVIDIA?
Look, I'd say it's Tesla with a little NVIDIA, and guess what? That's a cool club to be in. And when it comes to Tesla, I think this is Tesla in 2015, 2016, where I view Palantir.
Okay. Just as long as it's not Tesla in 2023 or 2024, a brief period of time, you know what? Maybe Alex Karp needs to buy Twitter.
And again, but again, you look at Karp, you look at Musk, visionaries.
Yeah, visionaries, big personalities too. All right, Dan.
How do we resolve this debate? Code, I want to give it to you first, then I want to get some other people. Valuation versus it's Tesla, yada, yada. What's your take?
There's no debate. I mean, Dan just nailed it. Dan Ives knows what's going on here. All these people are going to sit around and they're going to realize that they missed all of the best technology companies over the last 20 years because they were worried about the valuation, period. End of story. Like, we're going to re-platform industry in the US on Palantir and Foundry. Like, what is that worth? It's sure as hell worth a lot more than 15 times sales. I'll tell you that much, So like, these guys just don't get it. I think that unless you've like probably lived in the technology world and you see how fast these things can take off and when you get an insight into it, you're like, this tech works and all this other tech doesn't work. I'm like, the fact that we're going to actually use something that works to do things that have never been done before. Like, this analyst, whoever he is, it's like complaining about the valuation. Like, the losers are going to read his notes, like that's what's going to end up happening here, in my opinion. Not investment advice, by the way. That's my opinion.
Dom, give me your take on this debate that we saw.
Yeah, I mean, oh man, it gets me fired up, dude. This is a clear example of when people don't understand technology and value delivered, and they're not close to the industry. They've not worked in it, so they have no clue about what the actual challenges are and what needs to be solved. And they take more of a sales approach. They take the CEO for their word on just a sales approach with PowerPoint slides, opposed to customers who are giving you examples of billions or millions of dollars of savings and what they're doing and who they work with. Like, this guy is nuts. $28? Are you kidding me? Like, I would love to roast this guy and have an interview with him on how he does not understand the ontology and this technology and what it's doing. Look at these results. Look at what Cleveland Clinic is doing with their software. Like, he said it already. This is unlike any other software company. Boom, that's it. You already said it, bro. So why do you have it at $28? You don't know what you're talking about.
Amir, give me your take on the debate that we saw.
I wasn't really paying attention. I was filling out the Excel sheet so I can present some nice chart for you guys. But I got the Coldstrap's comments, Dom's comments, and I guess they had on, who did they have on? I can already guess what he said.
Forget the debate. Give me my broader question here is valuation versus the technology potential we're seeing. I mean, how are you just thinking of that after this quarter?
They're related. I think it's a big misunderstanding that these are two separate things. If there is such a big technology advantage, then you can absolutely tell that narrative with numbers. So I completely disagree. My approach to investing is completely value based. I haven't missed Tesla. I haven't missed Palantir. I haven't missed a lot of great companies. So I think it's just detached. Now, if we're talking price to sales and PE multiples, then yeah, you're gonna miss Tesla and Palantir. That's not valuation, that's pricing. And then I completely agree with Dom and Colestrap. But for valuation, if you can tell a narrative that Palantir is going to be this massive, great business, then you can absolutely tell that narrative with numbers, and the valuation will make sense.
Vince, I want to get your take, but folks, it does look like we have a resolution to Canada as well. It looks like Trump and Trudeau just got off the phone. Yes, tariffs will be delayed for 30 days. Tariffs are delayed for 30 days, like it was delayed with Mexico this morning. So markets probably also getting a little bit of benefit from that. Vince, your take on valuation versus technology moat.
I need to do a very thorough self-audit because, as I said, like I never thought Palantir would be doing this good, you know, and I myself was like going into this earnings like, okay, the price has really gotten ahead of itself, and now I feel like it's kind of justified where the price was before the earnings, but now we're 20% up from that. So I feel like I need to really sit down and analyze what happens so I don't miss this the next time.
Matt, your thoughts on valuation versus overall moat?
Look, I understand that with a company like Palantir, you're going to have stretched valuations, right? But to me, it just continues to, well, I would say I wasn't expecting a print like this with respect to year-over-year revenue growth or quarter-over-quarter revenue growth. It way outperformed my expectations by a massive margin. I still think that there does need to be a slight pullback, regardless of whether or not you do see the generational type company that Palantir is. I'm not denying that whatsoever. But there's still some fundamental pieces with the company that I have issues with. And there's even better ifs, right? I mean, I just looked, we added 68 million shares just this quarter, just based on these SARs that just came through. That's a dilution of 2.5% to 3% just in the quarter, 7.5% year over year. That's something that needs to be addressed. And we have cash that's on, obviously at this point, starting to hit the balance sheet, 5.2 billion. That's 300 million more than I was forecasting for the end of this year. You know, we're just continuing to have idle cash added to the backlog of our balance sheet without any sort of real understanding as to how it's going to be deployed going further. Now, I'm not saying that we need to frivolously spend on buybacks or anything of the like, but you know, at this point, you're basically out competing your share-based compensation to hopefully make sure that the stock price goes up. To me, it's interesting. Granted, I understand if you're continuing to grow at a massive pace, you do need to reward your shareholders. You do need to reward your employees, but it just kind of is a little bit of a head scratcher. I do think that going into 2025, they do need to be thinking about the capital frame and how to put that capital to work.
So you're saying the head scratcher is that they didn't use their cash to balance out the SARs?
No, they don't even need to balance out the SARs, but with such amazing print they had, they only bought $18 million worth of shares, $64 million worth of shares the entirety of the year. And so not only that, you're buying that ATM at the market versus these SBCs that you're getting are much lower prices. So it's very interesting to me that they're not at least trying to do a little bit better, even with sorry, I'm a little bit sick, so apologies if I sound like a little bit of a child. But my hope is that they just do a little bit better of a job buying back a little bit more shares. But I am curious. Steven keeps calling me like a madman. I don't know if you want to give him a ring.
Has he called me? Yeah, he's we'll get his take in a bit. And then we'll keep going from there. Vince, any thoughts on what Matt's saying right there about kind of buyback.
I feel like him and me are on the same team on this. Like I do feel like the valuation is a little bit stretched, but it doesn't mean that on the long term the company is not going to grow into it. And like, keep in mind, we were buying in the 8s, and I wouldn't be adding at these levels. But there's also, as I said before, there's absolutely no freaking reason to sell the stock.
Yeah, that's a good point. I mean, I'm sitting on a cost basis of $13, right? So to me, I'm like, well, shit. You know, we're at 97, 98 bucks. It seems like a lot to me. Maybe the people in the chat, I don't know. We probably have 15,000 people at this point. They're probably sitting there like, oh, my cost base is only 60 bucks. Matt, get off your high horse. You know, you asked, why do you want the stock to pull back? I get you. I agree with you. The long-term valuation of the company will be $1 trillion at some point. This is a generational type company that I don't think we've even fully recognized the future value. They're going to continue to come out with great products, not only just great products, but products that are custom for the industries and things that they need to accomplish. The problems specific, like software that's specific towards a problem. It's not an Excel fit it and make it fit for your purpose. That's not how this shit works. So interesting to see how this company grows into the future.
I would disagree though. Like on the, I don't know, we can have different perspectives on it. I'd rather see them use that cash to innovate and new products as well as scale their developer community, because that ultimately in the long run would get us all more returns and get us more money. I could care less. I'm not cashing out right now, so I don't care if they do that. But everyone has a different personal, you know.
I would say like I know this for a fact. If they would take that money and put it into their partners so they could go train people at scale, like I'm talking like 10,000 people at some of these orgs that I know that could be brought up to speed on this platform, that would pay 10x, because what ends up happening is now when those people that are trained inside these partner firms and stuff, when new deals come in for their customers, they've got subject matter experts inside their organization that will recommend Foundry and AIP to be the platform to solve those problems. Whereas today they recommend competitors because they don't even know. Like, we're so early still, guys. Like, a lot of these people don't even know what Foundry is. They haven't even heard the name Palantir, right? Like, when they hear Palantir, they just think Peter Thiel, if they know anything, right? Or Alex Karp, right? That they on the developer level, on the boots on the ground level, they don't even know about this platform yet. That's how early we are in the growth story. So, man, if you take, a few hundred million and you put it into these large big four firms and partners who exist with Palantir right now, you will see an astronomical growth curve out the other end.
Yeah, and that's why I'm saying capital frame, right? I mean, I don't want to see buybacks frivolously bought as well. But if you're not going to invest into the business, you could at least buy back stock. But if you don't want to buy back stock, invest into the business. Use that capital frame that you're getting, whether it's 10, 15, 20% of your ops cash on a quarterly basis to do something, to benefit either the shareholders or the company themselves, whether that's investing in stuff like Shield AI. I'm all for that, right? Especially taking really good, good bets. I wasn't against the 2021 SPAC opportunities. I just think they maybe could have been spanned out over the course of a couple of years rather than all at once. Those sorts of things I'm 100% for. I'm not looking to just be buyback centric and, take that $1 billion and everything. But if you're just going to continue to stack cash, give it back to the shareholders, because otherwise you're just getting a 4% yield. I'm with you, Code. I think that if you can find a way to put CapEx back into the business, I guarantee with the 82%, 83% gross margins that we just saw this quarter, you guarantee that you're going to be able to get way more than a 4% yield than what we're seeing on the treasury.
I'll give you guys a little anecdote. Like, I heard one time that at Palantir, they didn't hire anyone for almost a year because they couldn't get them through the interview process. Like, they have like a really stringent interview process. It's like really hard to get hired there.
Yeah. Yeah.
And they need that because they need the best people in the world to solve the world's hardest problems. Like that's a must kind of have. But there's a lot of problems out there in the world that aren't the world's hardest problems that their partners can be solving. And so I think this scaling through your partner network, it can allow you to be a force multiplier for the people in the world who aren't going to solve the world's hardest problems, but are going to go out and solve all the problems. And I think that that investment back into the partner networks and getting as many people certified and proficient in this platform as possible, as fast as possible, will allow us to share with the world what we already know, which is like we have the secret still that this platform, we're going to re-platform all American industry on it. This is going to happen. It's going to happen. We know it, but the rest of the world doesn't yet. and we can bridge that gap. And I think that's what we're going to do.
So first of all, let me do a couple of shout outs real quick. We got about 10 minutes until the call, folks, and then we'll keep going into everything we got. Number one, first of all, shout out to Chad and Iliano. Both of these guys have done just an incredible job engaging the retail community and getting Palantir to work with all of us that have been covering the company for the past couple of years, and with whether it's the merch or inviting us to AIPCon. I mean, they've just done an incredible job. I'm going to put their Twitters in the chat right here. Everyone who cares about Palantir should be following these two accounts. Number two, we've been talking a lot about the community. A lovely woman named Scarlett knitted me a Palantir hat and a Palantir scarf at a meetup I did in New York a couple of weeks ago. And she ended up sending the same thing to Dr. Karp, which Iliano was nice enough to present to Mr. Karp. And I just wanted to show everyone that Karp is wearing a knitted hat from a shareholder who bought this stock at $7, doubled down at 15, has not sold a single share. And I think this is another reason why the stock has this momentum in this type of community. It's because you've got Karp that actually does care about retail investors, and you've got people like Iliano and Chad that are bringing investors into the mix, educating us about what this company is. Someone like CoatsRep who understands the tech, actually explaining what the hell the ontology is. All of that is just very, very special, and it's important to keep an eye on that continuing to be as special as it is into the future. Did we just hit $100? Let me make sure. Where is this stock right now? We are at 99.27. We hit 99.58. We did not hit 100. However, we do have someone joining the show that it would be nice to get their perspective.
I got to drop that.
What's up?
Good seeing you, Cold. Thank you.
Arnie.
I got to say hi to Arnie, though. What's up, Arnie? How you doing, man? I got to drop. I got to like jump on another call right now, dude. But
Thank you, Coach Trap. We'll talk to you later. Appreciate you.
Bye, guys.
Bye. Arnie, give me a raw take, man. Stocks up 20%, 36% growth, 31% guide. What are you thinking?
I'm just shocked. That's the true feeling. I mean, it's truly unbelievable that even for us, that we are bulls, we are convinced on the direction, we are convinced on the evolving story, yet the company keeps surprising on literally every side. We were discussing at the last Palantir Weekly how in reality the guidance was already positive, and I shared that even on the margin side, that 39% was, wait a second, but typically they tend to beat with a couple of percentage points, and bam, like completely demolished the gain at 46% compared with 39 guided. So I don't know what can I say apart from wow, and it seemed that the worry I had on the one-off expense, maybe it was already digested by the market, or it's just something so secondary for the main story that all the eyes are literally on the results. Because let me say that frankly, all the eyes need to be on these freaking results that they exceeded the rule of 40 at reaching 80-81%. That is completely unheard of for a company that is big and getting bigger. What typically happens is once the company reaches a certain scale, it is harder and harder to grow at a fast rate. Palantir is doing the opposite. The more it grows, effectively unlocking what we were thinking that would have happened. We are seeing the network effects taking place in the B2B SaaS market. So great job, Palantir. Great job, us. And congratulations.
Amir, go ahead.
Yeah, I was gonna say there's a lot of interesting stuff here. Did you guys? I heard the guys talk about expensing cash. Did you guys see how much cash they actually have?
Yeah, 5.2 billion.
5.2 billion, yeah.
Yeah, it's 5.3. Yeah, it's crazy. That's up from 4.5. But yeah, operating margins were only 1.3. So the only reason they made EPS and net income was through some other one-time expense that is just in other. So I don't know yet until we get the 10K, I guess. But yeah, I mean, there's a lot of interesting stuff here. I have a lot of charts if you guys wanna, or we're going into the call, so maybe
we'll save for the weekly because we got 5 minutes of the call.
Yeah, sure.
but
I
definitely
didn't get to say a lot. I was just busy like putting in the numbers. But yeah, crazy quarter. A lot of strange like one-off expenses that we need some more commentary on, but I'm sure we'll get it sooner
Can
or
I
later.
say I appreciate how they depicted the first slide. In Q4, we celebrated the successful delivery of our market vesting SARS. Like something that could have been perceived as negative, they turned it into something very positive. And frankly, I'm happy that they were able to achieve this success along also with investors.
I also want to shout out real quick. I can't post the link because it's a little bit too long, but Karp has a book coming out called The Technological Republic. I think if you're a Palantir shareholder, you would probably want to read that book. It is on Amazon right now for pre-order. It comes out in 2 weeks. I'm assuming Karp is going to go across the world speaking about this book. It's also amazing marketing for Palantir because when you have a company that's as exciting as Palantir is and you have a written format to explain their ideologies, their philosophies, I think that's very important. So if anyone has not pre-ordered that book, The Technological Republic on Amazon or any other bookstore, you should be able to find it and get that pre-order coming in. We are at $99.85. We hit $99.91. We have 4 minutes until the call. Usually when Palantir gets this close, within 20 cents of a new dollar range, it ends up getting there. So I wouldn't be too surprised if we do hit 100. Palantir stock up 19.5% right now after hours.
This makes my Seeking Alpha article look really bad.
Well, there is one not very nice thing about the quarter. My chart kind of messed up now, but yeah, non-US commercial declined again, so that's not amazing.
Well, that's international, right?
Yeah. So US is doing
Interesting.
amazing, fabulously, but international just can't get a break. I don't know what they're doing over in Europe, guys. Get your stuff together, Arnie. What are you doing?
But I guess that's interesting,
too, buddy.
The fact that we're able to kind of power through that, even though it stays flat or goes negative, and it's only going to get exacerbated, right? So now that the fact that the U.S. commercial is almost taking over 50%, if not more, then you obviously have the U.S. government side. It's almost like the international piece. While as much as I would love to see that continue to grow, it's going to matter less and less if U.S. commercial continues to succeed as it has.
Well, as a side note, consider that ServiceNow, so a company that is broadly comparable with Palantir as a leader in B2B tech and now trying to push the AI narrative, actually got hit by 10% because they missed on the guidance, and the guidance was missed mainly because they were weak on the international side. So this tells us that proportionally speaking, the US side of Palantir is so strong that is able to overcome whatever weakness on the other sides.
We got about 2 minutes until to the call. We are at 99.9. I know some of you guys might have seen 100 on international brokerages, but the one I'm looking at is at 99.95, 99.99. We are literally, there we go. $100 for Palantir, Monday, February 3rd, Q4 2024 earnings. Congratulations to everybody.
So on a fully diluted basis, that means we are now worth over $250 billion.
I think so. Correct. On a fully diluted basis, correct. 250 billion. Yep. We got 2 minutes until the call. Put one word in the chat to describe what you're feeling. We're going to end off with that question before we get into the call. One word in the chat for what you're feeling. Dom, I'll start with you. One word. How are you feeling?
Blessed.
Amen. A freaking men. I mean, absolutely. Arnie, one word to describe how you're feeling.
Rich.
I thought you said preach. He said rich, guys. He said rich. Okay. Amir, what are you feeling?
Looking up private islands on Google right now.
You know who's calling me right now? My sister's calling me because she was down yesterday on the tariffs war. Now she's probably excited. Watch this. Oh, I couldn't pick up. She's probably wondering why her portfolio is up 20 grand right now. And, it's because her big bro bought her some Palantir back when it was at $20. So there you go. But Matt, one word. How are you feeling?
Speechless.
Okay, there we go. My one word is community. None of this is possible without community. And this is one of the best communities ever. And it's a blessing to be on this journey. So here we go. We should be getting into the call very soon and officially starting Q4.
Let's go. Just a quick correction. International did increase. I just made a mistake. Oh, that's good.